What do you do if you're an adult and your parents ask you to take out a credit card for them to use or to co-sign for a car loan or a mortgage? Ted is here. Let's begin.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Okay, Ted, welcome back. So you and I have had many parents who co-signed a debt for their child.
At least once a week.
Pretty common.
Yep.
It's been happening forever. And then, of course, the child can't pay and the parents get stuck with the debt. So,
right.
Which is why we always say don't ever co-sign for anybody, but we're just old meanies, I guess. So today we're going to discuss it from the other perspective. What happens if an adult child co-signs for a parent and the parent can't pay? Well, the answer is pretty simple.
Right. The adult child has to pay.
There you go.
That's how co-signing works.
That's our podcast. Please like and subscribe and leave us a comment on YouTube and Spotify. So, yeah, co-signing is fine. Well,
no,
even that is a silly statement. So if you co-sign for somebody and they pay it off the next day, fine, everything's great.
Right.
But there's two big problems with co-signing. Number one, the other person doesn't pay, and as a result, you're stuck with it. Because co-signing it doesn't mean you're 50% liable.
No. So when you co-sign a debt, anyone that has a signature to that debt is 100% liable. They can't collect more than 100% of the debt from everyone involved, but they can collect it from each of you if the others don't pay.
Now, you might say, well, okay, I get all that, but I trust my child, my parent, whatever. They've got a good source of income. They're going to pay.
Sure.
The other place you get burned, though, is that now may appear on your credit report as a debt. Likely will.
So increases your total debt burden as well as probably impacts your utilization rate. And if there are any payment hiccups, which are beyond your control, there's more negative impacts.
You're in big trouble. And yes, you hit the nail on the head with that first piece. Even if all the payments are up to date,
right.
I now decide I would like to go and finance a car. I can't because I'm already maxed out on my borrowing capacity, even though I haven't borrowed anything.
Right.
So there's some problems. Okay. So I guess the next question is why? Why would a parent who obviously is much older than their child, because that's how time travel works.
Unless their birthday is February 29th.
Then I guess
they might be
wouldn't
younger.
be, yeah. So what would possibly cause a parent to say to their adult child, hey, can you help me out by co-signing on a credit card, a loan, something like that?
Just think of the last couple of years in particular. So I'm a senior. I'm on a fixed income, but inflation, particularly housing and food, went crazy. Well, suddenly, the government's not going to give me any more money on my pension, but suddenly I've got to come up with another 25% to my monthly budget to get by.
I thought everything from the government was completely indexed to inflation and everything was fine. I don't know what you're talking about here.
We'll have a call to Mr. Carney.
Exactly. And you're right. If you look at the inflation rate for food, I think it was between September 2022 and the spring of 2023. It was 10% a month.
Right. Which is crazy.
I realize food is not your only expense, but you could certainly make the argument that
we've all gotten used to eating it.
We have. And I suspect for a lot of people, their expenses have gone up more than their income, which puts them in a squeeze.
Well, that's an easy example. Another example would be your parents have always been there to help you out, and you have siblings. And so you may not be aware that one of your siblings has been helping them. We see this pretty often, too. So my sister needed some money. Well, parents are always parents. They made the money available, but they did that by tapping into their own credit. Now they can't afford.
And it's also possible that your parents helped out one of your siblings, and now they're struggling, which is why they're coming to you. So
right.
There's many different layers to this onion here. And we also know, because we do a study every year,
Joe
Debtor, Hoyes Michaelis bankruptcy study, that we're getting older. So last year, baby boomers, which is people who are...
Which is me, but not you.
Exactly, yeah, because I believe the cutoff year was 1963 or whatever. So they're 11% of our clients. Generation X, which is, I guess me, the generation after the baby boomers are now 30% of our clients. Right. So we talked about this a couple of weeks ago on episode 563, but the older you are, the higher your credit card debt.
Right.
So if you're, 25 years old, now your credit card debt's around $15,000. if you're over 60 and you're one of our clients, your credit card debt is
$27,000, $28,000.
So
twice as much.
Twice as much. Yeah, I mean, and every age cohort it goes up. If we can, we'll throw this picture up on the screen so you can see.
Right.
And in every cohort, it's going up. So, okay, let's put this in terms everyone can understand. Let's say that you are 40 or 50 years old, which you are not.
That would be nice.
That'd be great, but neither am I. And let's say your parents, therefore, are 60 or 70 years old. That would kind of mathematically check out. And they're having a tough time of it.
Right.
And so they come to you and say, hey, Ted, can you co-sign a loan for me? So let's think through the thought process here. What would be the first step in making a decision?
Well, you've got to understand the risks to you. So I'm not telling you to be mean to your parents, but this is a financial decision, so you've got to understand the implications. So if they want to get a credit card, or rather they want you to take out a credit card and give them a supplementary, you've got to understand that you're legally responsible for every transaction that goes on in that card.
And if they don't make a payment,
right,
you're on the hook. And in the example you gave, which would be the most common one, it's your credit card.
Right.
Because there's really no such thing as co-signing for a credit card. That's not a thing. It's you get the credit card, put them on as a supplemental. So there's two different things. There's supplemental and there's joint.
Right.
What does that mean?
Well, so supplemental. My oldest teenager is driving now, and so I got her a supplemental credit card. So if she needs gas or a tow or something, she can look after it. She's not legally responsible for the debt, partially because she's a minor, but that's not the way I set it up. A joint credit card would be that she has full access to it and she's responsible for the charges that I put on the card.
Yeah, I like that. So for a supplemental card, your daughter did not go into the bank and sign for it.
She didn't apply for it. In fact, I ticked a box that said, yes, I've explained to her what this means.
Yep, and you're entirely on the hook.
Right.
Whereas if a better example would be you and your wife, you go into the bank and say, hey, we want a credit card. Both of our names are going to be on it.
Right.
You're both completely responsible.
Mm-hmm.
Now, in either case, you're responsible.
That's right. It's my credit card.
It's your credit card.
Regardless of whether or not I think it's the daughter's card or, in an example we're talking about, you've given it to your parents, it's your card.
Right. So if your parents say, hey, we need a credit card, whether you put them on as a supplemental or you put them on as a joint, you're 100% liable for the whole thing.
Correct.
Okay. So the credit card, we understand that. What about co-signing for a loan? So I'll give you two examples, car loans and mortgages.
Okay. Well, so let's talk about the car loan first. If you co-sign, you are co-borrowing. So you're not saying that, if my parents don't pay, I'll give you some of the money back. You're saying I will give you all of the money back. And it's even more complicated because you don't have any interest in the car. So they own the car. They're the ones getting the beneficial use for it. If they don't make the payments or it gets wrecked and they don't have insurance, you're on the hook for the loan.
Yeah, so I guess I kind of want to make sure my parents had insurance. So the difference is if you go get a car loan and you're having trouble paying it, you could say, okay, well, I'm going to surrender the car. I'm going to sell the car because you have control of the car.
Right.
On the green slip, your name's on there. Mm-hmm. But in this scenario, it ain't your car.
Even if you went to the extent of being a co-owner on the car, and you can do that, you still don't control the process because they've got to cooperate.
Right. So you're taking on a significant risk. Mm-hmm. And I guess it's exactly the same with a mortgage, only way bigger.
Yes, much bigger, like tenfold.
So there you go. And so again, if you co-sign a mortgage for them and they can't make the payments, well, you're on the hook for whatever resulting shortfall is. Now, you've already answered this question, but we're going to keep hammering it because that's the whole theme of the show.
Yep.
So what's the problem with all that?
Well, so in the examples we've just given you, you are directly tied to these new debts. If it's a credit card, car loan, or a mortgage, you are responsible for all of the payments, any late fees, any service charges. If your parents don't do what they're supposed to do, it falls on you.
Simple as that. So it's pretty risky.
Right.
And as we already said, even if they make all the payments, you've now soaked up some of your borrowing capacity.
Right.
So if you've co-signed a mortgage for them, you're probably not getting a new mortgage for a brand new house you want to finance tomorrow.
There's only so much room in your credit suitcase. So you've got access to this much credit based on the math, your assets, your income, all of those sorts of things. You are now taking a chunk of that and you're saying, I'm going to let my parents use it.
Would that be the same as a credit backpack?
Is that a thing?
I just made it up. And I like the visual because you've got this backpack on your back and it's weighing you down, you see? So there you go. Maybe we'll make that a thing. We'll make that a trending thing.
Right.
Okay, so co-signing is risky. The bigger the debt, the higher the risk. If you're co-signing a $1,000 credit card, okay, I guess the maximum risk is $1,000. It's not a big deal. If you're co-signing a car loan or mortgage, it is. So, okay, so step number one, when my parents come to me with this request, I want to understand the risks.
Right.
Okay, what's the next thought process I'm going to go through?
So step number 2 then is, why are they coming to you?
That's a
You
good
need
question.
to evaluate their financial fitness. What has brought this about, and does it actually even make sense that they're needing to access more credit? What's going on?
So what's a possible reason, I guess you already addressed it, as to why they would be doing it? Their expense have gone up.
Right.
That's an obvious
So they're
one.
on a fixed income. The government's giving them $2,500 a month, and now it costs them $3,000 a month to live. The credit card is not going to solve this problem, by the way.
No.
There's not enough money coming in. You and your siblings, if you have any, better figure out what you're going to do with the parents.
So there's a really key point then. If
Right.
they're coming to you because their income is not enough to meet their expenses, all the borrowing in the world does not solve that problem.
Correct.
You got a leaky boat. You can keep pouring water into it. I guess you
Pour
would-
water out of it.
Out of it, sorry. This is why we don't let me do the analogies. Could I
And he
wear
doesn't ride a boat ever.
Could I wear a backpack in this boat? What? So yes, there is something fundamentally wrong, and borrowing does not solve that problem.
And I'm going to add an element to this. Most parents will be reluctant to talk to their children about their finances. So I'm willing to bet that if they're coming to you looking for help getting access to credit, there's already a significant credit burden in place that they're trying to hide.
Yes, I think you're probably right. And it would be the same vice versa if the kid is going to the parent, I think. So, I mean, I can paint a picture where my parents are, maybe they've been renters their whole life. They put all his kids through school and, they've done a great job of it. They're financially sophisticated. And now in their retirement years, we'd like to move up to Elliott Lake and get one of those little townhouse condo types thing.
One of those new container condos that they're selling to seniors. So.
And but they're cheap. It's cheaper to live up there, whatever. I'm not trashing Elliott Lake here. And there's seniors communities everywhere. And so maybe because they've never really had a whole lot of credit, they come to you and say, hey, I'd like you to co-sign on this mortgage for me. Okay. I can sort of see that because there is a real estate backing it up. It's not a big deal. Mm-hmm. But what you're describing is they've perhaps a long history of financial problems.
Right.
This is not going to solve them. Mm-hmm. It's
not even a Band-Aid that's going to work.
Yeah.
So you've got a cut on your arm, you put a Band-Aid on there, and it just bleeds through.
Right, because you got 4 other cuts on your other arm. It doesn't really do anything. So so what you're saying to your parents is, okay, I'm going to need to see some numbers here.
We need to know why this is necessary.
Right, and so I guess it's going to be, let's start by getting a copy of your credit report.
Right.
So we can see what's on it. Show me your bank statement. Show me your credit card statements, whatever else you've got, which is exactly what you and I do with every client we meet.
That's right.
And it presumably would be what a financial planner would be doing if they were meeting with someone too.
Yes.
Okay, so you're assessing your parents' situation.
All right.
Kind of obvious what's going to come next.
You have to look at your own situation. Do you actually have the capacity to do this without putting yourself or your family at risk? So it's you realize, okay, your parents do need some kind of assistance here. Are you the right person to provide it?
Yeah, I want to help my parents.
Right.
I mean, they've always helped me. So, okay, again, we're hammering this point. So by the end of this podcast, you should probably get it, everybody.
And you may not like us very much.
Yeah. So number 1, can you cover the payments?
Right. If something goes wrong, always assume the worst. Mm-hmm. If something goes wrong, can you handle this extra burden?
It's kind of like driving a car. Okay, I think everything will be fine, but I've got a spare tire. I've got, CAA. I, of course, carry one of those charging bricks with me everywhere, and I've had to use it at least once this year already. I don't expect it'll happen, but if it does, I'm covered.
Plan for the worst, hope for the best.
Right. So if I'm co-signing a mortgage for my parents, now I know that they get CPP and OAS, so there's always some money coming in.
Right.
But worst case scenario, maybe I have to cover $500 a month of the mortgage. Can I do it?
And for how long can you do it?
Well, forever, I guess, is kind of the question. A month or two, probably not a big deal.
Okay.
But then I'm also got to look at what I want to do here.
Right. So there's a future element of this to you. What are you trying to do for your family? So do you know that your kids are going to university in 3 years, so you got to have money for that? Do you know that your house needs significant maintenance or repairs? Do you need a new car? Are you hoping that you can retire in 5 years so your income can retire?
Yes, I am.
There's all sorts of stuff going on that you need to factor into this decision.
Right. So my mortgage comes up for renewal next year, or maybe I've been saving and now I'm planning, real estate prices are coming down. I can finally buy something. That's what I'm planning to do next year.
Right.
I co-sign for somebody and I've got a problem. So, okay, so let's assume that you really want to help them, but you've assessed your own financial situation and you just don't have the resources to do it. I don't have the borrowing capacity. I don't have the cash. I plan to buy a house myself next year. Like I can't do it.
And I'm going to add an element to that. You don't want to do it. So you think, you're having an argument with your spouse. You could do it because it's her parents, not yours, but you're afraid that the stress is going to cause problems. There's so many ripples effects to this. It's, you're dropping the stone in the pond. How far is this going to go?
Yeah. So either I can't do it, or for whatever reason, I don't want to do it.
Right.
Or I can't or don't want to do it to the level that they're asking for.
Right.
Like, I think if your parents say, hey, I need, $500, fine, here's $500.
Right.
I'll take that off my credit card, whatever.
Whatever you have to do, that's an easier answer than any of this stuff. It's a short-term commitment.
I guess if they have a short-term problem that, okay, my parent retired and it's going to be a month before their pension kicks in and they need a little bridge, fine. Right. Obviously temporary, no problem.
Yep.
But, okay, we're talking about, much bigger numbers, and either I can't or I've decided I won't because I don't want to drag myself down. So can I still help them? Is there anything I can do? What would be
so
the
there probably are. So let's be more specific. Let's look at credit cards first. So what about instead of getting them a regular credit card, you get them a secured card? So maybe you've got to help them out with a deposit, but a secured card is where you put money on deposit at a financial institution. They basically freeze it. They give you a credit card with the same limit. And so anything goes wrong, the payments aren't made, they take the deposit, they cancel the card. That would limit your exposure to whatever the deposit is.
Right. So $1,000 card, I put $1,000 on deposit. The maximum limit on the card's $1,000.
So you can't get into any more trouble than the money you've already put there.
Right. And so it's not even my card in that case. It's their card in their name. So it's not affecting my credit. I've put the $1,000 up to help them, but that's it. I'm not liable for anything more. Yeah. How is that different from a prepaid card or a reloadable card?
Well, so a prepaid card or a reloadable card is basically like a gift certificate. So you load up a card with $1,000, they go out, they spend it, and then when it's empty, you got to load it up again. And so that would be another way that you could help them, but it suggests an ongoing commitment. Every month, you're going to be loading up that damn card again.
Well, or you're not, I guess, one way or the other. But yes, that would be another way to do it, to say, okay, you got that car repair you need to make. Let's go and get a reloadable card, and there's a whole bunch of places to do it. Again, they're not sponsors of the show, so we're not going to tell you who they all are, but they're not hard to find. And a lot of these are not traditional banks.
Right. Banks
don't like loadable cards. They don't like prepaid. They don't like secured.
Yep.
They want you in the normal stream. But there's a whole bunch of the fintech companies that have a lot of these. So, okay, I'll get one set up. And a lot of these you can go online and have them set up in 10 minutes.
Yep.
And then, fine, I'll transfer $1,000 to your account, and there you go.
If all they really need is a credit card for convenience, then the secured card makes a lot of sense, right? But there's probably more to it than that.
Yeah, so they want to pay for their Netflix subscription, or they have to rent a car, or they have to book a hotel room or something.
Nobody likes cash anymore. Nobody wants you to write a check.
Exactly. You can actually do it with your phone now. You just beep it.
So another option is, instead of letting them apply for a new card, take a look at your own existing credit cards, and maybe you give them a supplementary on one of yours. Pick one that you don't use very frequently, or that you can simply say, okay, this one's going to be the parents', and then limit what the access to your credit limit is that they have.
Or what you described in the case of your daughter.
Yep.
You get a brand new credit card, $1,000 limit, whatever it is. Here you go. You're on it as a supplemental.
Right.
And again, the exposure is capped.
And that's better than them getting a card, because you can directly track what the hell's going on.
Yeah.
So it's going to show on your app for your banking, and every month you'll see the transactions going through, and you can track when the payments are made. In fact, you can tell them they've got to pay you the money so that you can make the payments.
Which the problem with that is you are now the collection agent on behalf of the bank for your parents.
And you're a lot more involved in their life than you ever wanted to be.
So it's like, hey, why did you go to Starbucks and buy a coffee?
Again and again and again and again.
Exactly. Well, because I go and chat with the guys at probably would be Timmy's, not Starbucks, but whatever.
Right.
So, and do you really want to be calling so the conversations you're now having with your parents are, you don't forget to transfer the money. You didn't pay the amount. Don't forget about this. Don't forget about that.
So in response to all of that, I'm going to suggest to you that you're probably getting at the point of your life where more and more of this is going to happen. So if your parents need you to access more credit, then probably you need to take a more active role in what's going on with their financial affairs, just overall. And sorry, It's just the age we're all getting to be. It's just what's going to happen.
Yeah, and I guess as you get older, your mind starts to, not be as robust.
Dwell on other things?
Yes. Well, and, if I've got that thing with my phone where it's doing that thing, I talk to one of my sons.
Right.
Because they go, you just click here and here. Okay. Yeah. Why? Well, because they've grown up with it and I'm an idiot. Yeah. So
and they've got it set up so they're tracking you in case you wander off.
Exactly.
Sharon hasn't told them that.
They know exactly what's happening. So there are things where sometimes it's just easier to say, you know what? Why don't I take over that element of what you're doing? Tax returns would be another example.
Right.
Okay, you know what? I'm an accountant, so I actually know how to do that, but most people have figured out how to use the online systems and whatnot. So let's make sure they get done. I can download the information, assuming CRA system's working next year. And that way I know that element of it is dealt with. Credit cards would be the same thing. So
this is all the tip of the iceberg, folks. You're going to be looking after more and more of their stuff.
Yeah, and you got to be, what do I want to be doing? What am I willing to do, and what are they willing to give up? At what point do they say, fine, I'll let you deal with it? Yep. So, okay, you talked about credit cards.
All right, so let's talk about loans.
So the
first question is, do they really need to borrow whatever it is that they're looking for? Maybe you can talk them into a smaller amount or some sort of co-borrowing with a stronger credit. So.
Yeah, and if they do need to borrow, but maybe there's ways to borrow less.
Right.
So, okay, do you really need the brand new Cadillac? They still sell Cadillacs? Is that
they
still
do.
a thing?
In fact, now they're the electric Cadillacs, which are quite expensive.
Oh, well, that's like $100,000 or something.
Well, it'll be a
little more than that. Eh?
Yep.
I'm so out of touch, and that's what a car costs. So maybe it's like, okay, yes, you're right. You need a replacement car. Let's go find you a good used one. As
a Honda, perhaps.
A Honda, yes. In fact, I got a 2011 if you want to call me up. So, and maybe it's, okay, you need to finance that car. I'll throw in part of the down payment, part of the security deposit, something like that.
And hopefully that reduces their monthly obligation, makes it something that they can manage themselves.
Yeah. And again, you're capping your risk because that way I'm saying, look, I'm not making your monthly payments. I can't do it. But look, I can put down X number of dollars for your down payment.
Right.
Your loan payment's going to be less. Okay. So that's all good. But my parents are going to need even more help than that.
Right.
So, okay, well, we're going down the rabbit hole here.
So now you've got this familial role reversal. So the parents are no longer in the role of the parent and the overlord. You're now becoming the parent and the overlord for your own parents. And that's natural, folks. It happens to just about everybody. You got to learn how to deal with it. What you have to do, just like you did with your kids, you have to set some boundaries, the ground rules. How are we going to do this going forward? What's allowable? What's not? What are the consequences of not following the instructions properly?
Yeah, and I guess with a kid, it would be like, okay, here you go. I'm going to give you $50 a month, and you can do whatever you want. I don't care.
Right.
Maybe it's the same with your parents. That okay, I understand you're going to be doing.
I'll give you an example. The teenager that's now driving. Anytime she puts anything on that credit card, she gets a receipt. She leaves it on my desk at home with a note what it was for. If I see anything on the bank statement that I don't have a receipt for.
There's a discussion to be had.
Hell is paid.
Yes. Yeah, so she filled up your car with gas. Okay, well, that's kind of what the whole point of
that's the whole point of this.
The credit card was for. So, okay, so setting boundaries, I think that's pretty important. We've also already hammered this, so we'll just kind of say it again that you got to protect yourself as well.
Right.
So if you're opening a credit card for them, set a low credit limit, monitor the statements, retain control of the account.
Make sure you limit your exposure to what you can realistically afford. I mean, we talk about this all the time. If a family member comes to you for help, you're better off to give them a gift than you are to co-sign a loan. You co-sign the loan, you're on the hook going forward if they don't act appropriately or they can't make the payments. If it's a gift, well, the money's gone and you're not worrying at Christmas for them to pay you back.
Right. And I totally agree with that. I believe it was in Straight Talk on Your Money, a chapter on exactly that. So if you want to help someone out, give them a gift. If they don't pay you back, well, in your own mind, it was a gift.
It's already gone.
So, okay, at what point do you have to finally say, no, I just cannot help you. I can't do it. That's it. Here's where we're at. Well,
so we've given you the things you need to satisfy yourself. And if they're not going to cooperate with any of those things, that's your first indicator, right? So what we wanted you to do first was look at their situation. Okay, how did this come about? They're not willing to disclose that, or you see a history of bad decisions. You probably shouldn't get involved financially. You should be doing something to help them. Giving them money is not the answer.
Yeah, and you're right. The history of poor financial decisions, like, mom and dad, you've kind of never been great with money. You've always spent too much, whatever. I'm not in a position where I can help you fund that continued lifestyle.
Right.
I just can't do it. So either I don't want to, or I can't afford the risk, or maybe I feel I'm kind of being manipulated here.
Right.
You went to kid number 1, and now you come to kid number 2, and then you're going to kid number 3, but you haven't told me that you went to kid number 2, and there's all some
How many of us are involved? What the hell's going on?
Yeah. And so probably a good idea to chat with your siblings and say, so did you get a phone call? Or you get a text message on WhatsApp or whatever? And so I think if they push back, you've got to, again, reiterate your need to protect my own financial future.
Right.
I got to look out for your grandchildren.
Mm-hmm.
So,
well, and frankly, you may have to look after them later. I mean, it's at some point, maybe we may need to move in or something along those lines. So,
and I can't already have used up all my capacity when you really for sure are going to need that help.
Right.
So, I mean, maybe in some cases it's as simple as, let's sit down and write out all the numbers.
Mm-hmm.
And you and I are not big fans of budgeting.
We don't like the word.
But knowing where your money goes, that's probably not a bad thing.
You need a plan. And the question is, how formal does that plan need to be? So if you're good in the head, you say, okay, well, I got $3,000 coming in. This is what I spend on my rent, my car. You got it all plotted out. You know what you can spend. If you've never even taken the exercise of writing down how much you're spending on what, that's a good place to start.
Yeah, and I definitely would. Now, the final topic here, which is the title of this show, is, of course, debt.
Right.
It's very possible that the reason your parents are coming to you for help is, yes, their income is not as high as their expenses, but the reason is they've got a whole lot of debt.
Yeah, they've overextended themselves for whatever reason.
Yeah, maybe perfectly legitimate reasons. Who knows? But now they're in a position where $1,000 a month is going to debt payments. If they could eliminate that, they wouldn't need your help.
Right.
And so under those circumstances...
So when anyone comes to see us, first we assess how big is the problem? Is there a way for them to deal with themselves? Should they be looking at completing a consumer proposal to repay part of the debt? They need to look at filing personal bankruptcy. All of those options are on the table, and we need to look at each one to see what makes the most sense.
Yeah, and we've been in this situation lots of times where either the parent or the kid, because it works both ways, has, let's say, $50,000 worth of debt. Credit cards, bank loans, back taxes, payday loans, whatever.
And for seniors, that's pretty common.
Yeah, it's not uncommon.
I mean, the credit card debt on average is $28,000.
And that's just credit card debt. That doesn't include all the other things.
Mm-hmm.
So it could be that, you know what, Mom and Dad, I could help you out to the tune of $5,000 or $10,000. Maybe I could help you to the tune of $200 or $300 a month to go towards this.
Right.
But I can't give you $50,000.
Right.
And me giving you a couple $100 a month towards your debt when your interest payments are $1,000 a month or $2,000 a month.
Yeah, we're not solving the problem.
We're doing this forever. So in that case, it's like, well, okay, maybe you got to talk to a licensed insolvency trustee about doing a consumer proposal so that instead of paying $2,000 a month, you're paying $200, $300, $400, $500, whatever the number is. I can help you with that because I know there's an end to it.
And it makes sense.
And I also know that you're not going to be doing a whole lot of additional borrowing because you're now in a procedure
going to restrict
like that.
your access to credit.
Yeah. So now that's probably the most difficult conversation to have.
Well, the most difficult conversation is to get them to open up to you in the first place about their finances. They are your parents. You are their child. It's none of your goddamn business what they do with their money.
Yeah. Yeah. And they've always been your parent.
Yeah. They brought you into this world. They'll take you.
Exactly.
Bill Cosby
and even
line,
though you might be 60 years old now, they are still your parent. It's just the way it is. So, okay. Well, I think, what we've talked about is exactly the answer. You sit down, figure out what's going on, try to understand the real problem, what's happened to take this off the rails. And maybe the answer is, okay, you know what? You've got too much debt. That's what's causing your issues. You're now on a fixed income. Let's get a proposal done. Maybe it does have to be a bankruptcy. The debt's eliminated. I can help you with that. I just can't help you with everything.
Right.
And if you can do that, you've probably got an answer. So, okay, those are difficult conversations, though. You want to help your parents, but you also don't want to end up bankrupt yourself because you helped your parents. And we've seen situations like that as well.
Yep.
So I think you absolutely for sure want to consult a licensed insolvency trustee. Bring your parents in. We do everything by video or in person, whatever works for you.
Right.
Let's go through the numbers, figure out what the answer is, and help you from there. So there you go. That is our discussion of parents and debt. never a fun conversation, but if you can solve it, then everything becomes much easier. So I already said it, but like, subscribe, notification bell, tell us your stories, whatever. We will be back next week with an all new episode. Until then, thanks for listening and watching. I'm Doug Hoyes. That was Debt Free in 30.